Markets are off the opening highs on the weekly expiry day. The Nifty sustains above 25,200 while the mid-caps relatively outperform, even touching a record high at opening.
Reliance climbs after the company becomes sole successful bidder to set up advanced chemistry cell manufacturing facilities under the battery PLI scheme. The company's board will also meet today to mull a 1:1 bonus issue.
Zomato zooms over 6.5% after brokerage firm JP Morgan issues an overweight rating for the stock and raises its price target to 340 rupees from 208 earlier. Says that the company is spearheading a rapid retail consumer transformation in the country.
Linde climbs nearly 3.5% with the company set to acquire Tata Steel's industry gas supply assets at Kalinganagar Phase 2 expansion project.
And CEAT has surged on the back of positive management commentary. The management told CNBC-TV18 that they maintain their overall double-digit growth outlook for FY25. They've added that they expect margins to improve in the second half of FY25 as well.
Hello and welcome to Chartbusters. I'm Nigel, with me is Hormas, and as we speak, the markets are as flat as can be. We started off well in the green, but the Nifty has just dipped into the red.
It's the weekly expiry, and it's a big day. It's just early days so far, the first hour, and so we'll keep an eye out on what the benchmark indices do on the weekly expiry day. Of course, it's below the 25,200 mark as of now. The Nifty Bank as well, currently trading flat, but it is the broader markets that are doing well in today's session. The small cap index is up over 1% now, while the mid cap index still above the flat line, but trading with gains of just over 0.2%. But plenty lined up in terms of corporate conversations today.
Well, that's right, Horma. So let's get straight to that then. We have Suson. That's a stock on our radar. Remember, the stock has been on a tear of late. It's nearly doubled in 2024 alone. The company recently sold the corporate office building to 361 Arm for around 411 crore rupees. To discuss the sale, what it means to the company going ahead, we're joined by Mr. Himanshu Bodhi, who is the Chief Financial Officer of the company. Hi, Himanshu. Good morning. Good to see you win. And the street likes what you're doing with regard to the actions, which is shareholder friendly, and it's good for your business as well. So give us a couple of details then with regard to this. How will you use this 400 crores odd? And also, what is the annual rent outgo that you'll have to pay, since now you'll be leasing it back?
Well, I think firstly, we are only implementing what we've been telling the street. Monetization of our non-core assets has been a long impending strategy, which is just coming to fruition with the monetization of our corporate headquarters. Of course, the transaction is a sale and leaseback transaction, wherein the operations of the company don't get disrupted. We continue to occupy the space on a lease basis, and whilst we also have sublease rights on the premises, our gross annual outgo will be roughly about in the vicinity of about 45 crores per annum. But of course, net of any third-party rentals that we are able to generate, that should substantially reduce over the next few months.
What will the net number be then? If gross number is 45 crores, net number will be how much?
Difficult to say, but our target would be to at least reduce that by half. Get to close to about 20 to 25 crores per annum of lease rental cost. That, of course, will happen directionally. It won't happen immediately. It might take us a few quarters to get there, but that's the target we set out for ourselves.
Himanshu, good morning. Thank you for joining in, and wanted to ask you about the business trade-off now. But what are the kind of policy pushes that you are seeing for the wind energy business, and how is demand shaping up on the ground? There are a couple of follow-ups that I have on this aspect, but first up, let's get to the demand side of things. How is the demand currently shaping up on ground when it comes to the current quarter?
So I think there is no dearth of demand. As you know, we have about a 3.8 gigawatts of order book, which we announced at the end of Q1 results. There is a very strong lineup in terms of order inflow that is coming from current and new prospective customers, which of course we'll keep reporting at the right time. So we see the significant policy push towards wind and traction on ground picking up, both in terms of demand as well as supply and project execution.
That was one of the follow-ups that I wanted to ask you, Himanshu. There was this bit that Mr. Chalasani had highlighted in the earnings call as well about land being a problem for expanding capacity going forward, for not just for Suzlon in particular, but for the entire industry per se. Are you facing any such problems for Suzlon as such? And is there a capacity expansion plan on the anvil for FY25 as well? And if so, by how much?
So I don't think he meant that land is a problem. Land. Of course, in terms of availability, there is significant land parcel available in India for execution of wind projects. Where it is the maximum time for implementation of any project goes towards land acquisition. So it is a time-consuming and tedious process, but it is the availability per se is not a problem in that sense.
No, I meant the land acquisition bit itself. Are you facing any such problems on the ground?
No, again, as I said, it's not a problem. It is just a process that one has to follow. Of course, we are also quite focused on, investing capital into development of infrastructure on the ground in readiness of our projects that we see on the anvil, both for our existing order book and the prospective order book.
All right, since we're talking about the operation, just want to get this out of the way. Your order book, you said, was 3.8 as of now?
That's right. That's what we announced. Of course, that's what we announced at the end of Q1 results. Yes.
All right. And margins you were guiding, I think, for 17 to 18%. And I think the industry you're working with around 4.5 to 5 gigawatt of execution. And you're normally 30% of that. Just to reconfirm the guidance.
So again, just to clarify, that's, no guidance from our side. But the numbers that you've quoted are historical trends. That's correct.
Got it.
Other than the 4 gigawatts, which we believe the industry would do this year.
As I always tell you, Himanshu, we do the math. So we're good with that. You give us how do you see things panning out. So we get that. But Himanshu, I just want to understand a couple of more aspects. Non-core assets, what more are there, for you to sell? Can we expect something in this fiscal itself? The total quantum of non-core assets, how much can we see getting sold in this fiscal?
So I think, not really, nothing of size or substance. I mean, this was the biggest non-core asset that has been identified or historically by the company, something that needs to be monetized, which we've done, successfully currently now, of course. But I don't think this financial year you'll see any other non-core asset monetization that will happen. And in any case, I don't think there is any sizable non-core asset that sits on a balance sheet that may move the needle significantly other than the one that we just done.
Just to close the loop, you have an option to buy this property back as well. Do you plan to exercise this in the future? And at what price will you have to buy it back if you choose to?
So that, of course, time will tell, Nigel. Can't really crystal gaze on that one. Of course, how the performance of the company shapes up, how the real estate market looks. We've kept that optionality with us. And of course, closer to the time, is something that the management and the board of the company will deliberate. But we've kept that optionality available with us, and we'll exercise that option based on market dynamics closer to the time.
Any potential order wins on the anvil, Himanshu, in this quarter or in the subsequent quarters as well? And part two of my question being, you did around 274 megawatts of volume in the first quarter. How has the number shaped up in the second quarter, and what do you expect to close the year with?
So on the first one, rest assured, you guys will be the first ones to hear about as and when we get new orders. And of course, on the quarter two results, I think, probably 6 to 7 weeks when we speak again after our board meeting, you will have a Q2 update or an H1 update. But
okay, I'm not asking you for a specific number, but do you see that 274 number being crossed then in the second quarter?
I know you guys are good at maths, but performance is in line with trend or expectation. So no red flags, no concerns.
No red flags, Himanshu. As you said, what you all have promised the street, you all are delivering, and we'll hold you to those numbers. And we look forward to chatting up with you, as you said, 6-7 weeks from now, if not earlier. Thanks a lot for joining in and speaking to us here on CNBC-TV18. Well, for the time being, we'll slip into a short break. On the other side, we'll be joined by the management of EPPL. Remember, various brokerages like Prabhudas Leeladhar are fairly positive on the company's prospects.
Back with us here on Chartbusters, continuing with corporate conversations. Then now Prabhudas Leeladhar has initiated coverage on packaging firm EPPL, and they have issued a buy call on the back of strong growth prospects. We have Anand Kripalu, who is the managing director and global CEO of EPPL, who is joining in to discuss the company's road ahead in greater detail. Mr. Kripalu, good morning. Thank you so much for joining in. You know, one of this, the domestic brokerage has highlighted in its note that your company is well positioned to capitalize on the increasing demand in the laminated tube business. Now, how much of your overall business is this laminated tube segment, and what is the kind of demand that you are experiencing in the current quarter so far?
Well, thank you for having me on this program today. And you're right, we are predominantly a laminated tube player. And really, the dominant part of our business is laminated tubes. That is really our main strategic focus. But what I want to say before I really comment, and I won't comment too much about this quarter per se, is that we've seen reasonably good demand around the world in the previous quarter. And all this is driven through our vision, which is to be the most sustainable packaging company in the world. And, you know, for us, this is not just a line or a statement on a chart. It's something that penetrates through the entire business, into the soul of our business. We also believe it's not just the right thing to do, but also it will be our biggest source of competitive advantage over the next decade as more and more companies go sustainable. So as far as we're concerned, we've given a guidance of double-digit growth, sustainable double-digit growth with 20+ margins, and really that's what we are focused on delivering.
Hi, Mr. Kripalu. Good morning and good to see you in. This is Nigel on this side. Double-digit, you want to give us a further insight? Will it be low double-digit, mid double-digit, or high double-digit? If you could help us out, because the start to the year has been very, very good. You've done double digits of close to around 11%. And also your margins are in that vicinity of 18 to 19%, but you'll have a couple of levers as well. You've done some cost focus measures as well as I think in a couple of other units as well to reduce the cost. So margins in excess of 20% for this year on an average?
Well, I'm not going to commit exactly when, but if you look at our trajectory of margin improvement, I think I'd like to believe that it is sooner rather than later, right? So it should happen definitely over the next few quarters. As far as growth is concerned, we have historically been a kind of mid to high single-digit growth company. And the first guidance we gave and the focus of our strategy was to say, how can we accelerate that and get into the double-digit zone? And you're absolutely right. We've demonstrated that in the last quarter, albeit just above the double-digit mark. I don't want to push the boundaries at this stage of saying we'll be more than just double-digit. But what I can tell you is that there is a lot of healthy dissatisfaction in the company. As we get sustainable double-digit growth, we will keep raising the bar.
Okay. All right. Also, if you could give us a couple of numbers, if you had to put a number to the market share that you'll enjoy, could you tell us what is that? And I guess you're growing faster than the industry.
Oh, yes. We believe that we are growing faster than the industry. Now, we don't have precise numbers for global shares like you get through Nielsen and so on for fast-moving consumer goods. But what I can tell you is that broadly 1 in 3 toothpaste tubes in the world is ours. Okay? So it's a 35-ish market share. If you look at the other key sectors, beauty and cosmetics, BPC, and pharmaceuticals, we are kind of just about 10% market share. So really the focus of our strategy is to selectively build market share with oral and continue to go faster in the category, but to create discontinuities in growth in places where we have higher headroom, which is BPC as well as pharmaceuticals.
You know, Mr. Kripalu, I'll just get to the Brazilian aspect of your business in just a bit, but I wanted to ask you about the sustainable tubes business. It was around 29% of your volumes in the first quarter. Do you see that number going up as the year goes by?
For sure. And, there are a few components to sustainability. One is, of course, the product itself and the tubes. The other is people and process sustainability, which also we are very focused on. Now, this acceleration of tube conversion is, directed by our customers wanting to convert and our ability to have technology and supply capability to meet that demand. And the good news is we are one step ahead of everybody else in our readiness. And therefore, we are also seeing some wallet share gains happening as customers convert. So this 29% of the last quarter will absolutely rapidly accelerate pretty much with every quarter as this year goes. And over the next couple of years, I think we'll be predominantly a sustainable tube company.
By the end of the year, do you see that number going up to say 30, 35%, maybe even 40?
Well, I think the exit will certainly be in the 30s and maybe even the high 30s. Yeah,
right.
Absolutely.
Got it. There were some supply side issues that you had briefly mentioned in the first quarter as well. Has that got ironed out?
Those have got ironed out, and there is more about capacity expansion and some of our equipment's getting a little delayed on because of Red Sea and the sea freight challenges that everybody has been experiencing and the delays on that. So I think that's broadly ironed out as we have gotten into this quarter.
What about your capacity addition plans from here on? When do you lay that out? Because growth is looking good, demand is solid. You want to grab a higher part of market share. So I'm guessing that could, at some point of time, you'll be looking to increase capacity as well.
And that's something we continuously do. We typically invest capex broadly equal to our depreciation every year. And we are a reasonably capital-intensive company. Over the next 18 months or so, I think we will be adding capacity for about another 1 billion tubes. Okay? And I would say half of that will come from debottlenecking and better utilization of existing assets, and the other half will probably come from new assets, largely brownfield. We don't have any other greenfield around the corner at this stage, so it will largely come from brownfield expansion.
And how much do you plan to spend on that, Mr. Kripalu, for this expansion, part one? And part two, since due to paucity of time, I'm squeezing in the Brazilian bit as well. The last time you spoke to us, you mentioned that if the utilization in Brazil goes up to 80%, you will expand capacities there. What is the current utilization there, and when do you expect to get to that 80% mark?
So we spend about 350, 380 crores on capex, and you can assume half of that will go, or a little over half of that will go into capacity expansion. Okay. As far as Brazil is concerned, I mean, we're very pleased with the way things are ramping up. I can tell you this, that we have started conversations to evaluate expansion. We haven't taken any decision yet, but I think we are beginning to approach the threshold of utilization as well as increasing demand from new customers. So I think we should be hearing more news about this in the foreseeable future.
By when is that, sir?
I can't commit a date. We're still doing the work. We're still looking for customer demand. In this industry, you don't go and just put capacity and then wait for customers to come, all right? Because it's high capex. What you try and do is to make sure that you get commitments from customers. It may not be a hard contract, but at least commitments. And then what you do is you put in manufacturing lines. And in our Brazil plant, which is modular, we have the utilities, we have the civil work. We just need to put in the lines. And that is like a 9-month kind of project.
All right, Mr. Kripalu, we'll leave it at that. Thank you so much for joining in and sharing with us your views on the road ahead for the company. That was the management there of EPL on the road ahead. Let's now also get you an exclusive. Sources are telling CNBC-TV18 that the GST committee may deliberate on reducing GST on life and health insurance in its upcoming meeting. Timsy is here with the details. Timsy.
Well, as I said, the sources indicate GST Council may deliberate upon reducing GST rates on life and health insurance. Remember, this was a demand that was put forward during the parliament also by the opposition. Even Nitin Gadkari, Road and Highway Minister, had written a letter to Finance Minister that we should look at reducing or exempting GST on these. And now what we are beginning to understand is that the council may deliberate upon these two matters. The Fitment Committee, the council-nominated Fitment Committee, has taken a detailed review of the current rate structure. Remember, the current rate is 18% for the premiums paid on both life and health insurance. On life insurance, what sources indicate that the Fitment Committee has recommended exemption only for pure term life insurance policies and reinsurance. Over here, they say if this is given, that is a complete exemption, 18% becomes zero. In that case, the revenue implication is likely to be around 213 crore rupees. As per the latest data calculations that they have done, they say that the council should be very clear that whatever discussion happens to reduce the risk should be done on the pretext that the entire rate cut is transferred to the policyholders, that is in the hand of the people and not just for the companies. So that is a caveat, and also they say that this has to be a decision purely taken by the GST Council. They feel that a detailed deliberation is further required. Also, what we are given to understand from sources on the health insurance, over here, Fiscal Committee has recommended 4 options. First option is to exempt for all health insurance premiums and reinsurance of those premiums with a potential revenue implication at 3,500 crore rupees. Second option is to exempt GST to only senior citizen premiums and premiums with a cover up to 5 lakhs without any age bracket. Over here,
all right,
is likely to be 21.
Got that. Got that, MC. Got that, MC. We got the gist of that. We'll try to get you in a better line in a short while from now. But that's the big story that's coming in with regard to prospective GST changes. Well, let's slip in a short break. Come back, continue our focus on markets and stock-specific action. Welcome back. The Nifty is down, but you need to look deeper into the broader markets because the breadth of the market is still in favor of the bulls. You have 2 stocks that are advancing for 1 stock that's declining. The Nifty is down only around 20-25 points or thereabouts, which is par for the course. Normally, dips have get bought into, but today, in fact, is the Nifty weekly expiry. So let's see how the things do pan out. For the time being, that's it from Hormuz, myself, and the entire team that put this show together. You stay with us. Trading Hour comes up next.